Morning traders, it's your professor here live to give you a morning market update. So if this is part of your morning routine and you guys like the content, please press the thumbs up and like and subscribe for more future videos, as it is, the key thing that keeps me going to provide you with the knowledge and education. So let's get straight into it. So right now we see the S&P 500 currently moving between 4140 and 4150 key inflection zones. If you guys were able to watch our weekly watch list reel, we mentioned that the market has a key range of 4100 and from the downside, and the top range we have is 4195. So if you recall, last week we had an 85 point range on the S&P 500. This week we have a 95 point range on the market. It is OPEX week, so you guys definitely want to watch out for that, because during these times the market tends to be very choppy, and we can see a lot of volatility happen within that 95 point range. So far we do know that the key catalyst is that there's upcoming bank earnings. We have some smaller regional banks that are reporting earnings today, but nothing really notable. Main earnings that is happening is on Tuesday with the Bank of America. So that is key thing for banks and financials. One things that we do know about financials is that they have been reporting blowout earnings due to the fact that they higher amounts of money that have been flowing out of smaller regional banks into these major banks, and the amount of deposits has gone up. And when you also combine that with higher interest rates, as well, banks are reporting record profits. So in the short run, is bullish for banks and financials with these key blowout earnings, but in the long run, it is not, because it's not sustainable to maintain banks having these strong financials, especially when businesses start to go lower. So that's one thing you want to keep in mind. Now, after that, Netflix is reporting earnings, and this is a key thing for techs, because with their subscription model, we want to see if that is strong and moving forward. A lot of techs are currently running on the subscription base, such as Apple, Amazon, and Meta currently. So they're all those FANG stocks are definitely going to be implicated by Netflix earnings. If they show a loss, a major loss, or something that is quite a surprise, then we can see techs take a major nosedive as well. So even though we have that 4100 to 4195 range this week, if the market has news that is definitely devastating or a huge surprise, we can definitely see the market break outside those range. But right now, we do currently see the S&P 500 moving within that range. Followed by Netflix earnings. The next notable earnings that we definitely see as a major catalyst is Tesla. So Tesla, of course, will be a key movement as well. Premiums are very expensive on Tesla right now, and in the past earnings report, the stock hasn't moved on earnings. So we're kind of skeptical about playing any sort of earnings lottos, and we're most likely gonna avoid it unless if we have more additional information on the outcome of which way it may swing. Other than that, the key news and trends that we see right now is that semiconductors stocks are weak right now. We're seeing AMAT, LRCX, and so forth, ASML as well, down 2 to 3% pre-market. Now, I'm not sure what exactly the reason why semiconductor stocks are down, but one thing I do know is that we shorted a semiconductor stock last week into this week, because we noticed some weakness in that market space. Now, it could definitely be because of the whole Taiwan political and geopolitical risk that is going on. The no-fly zone should be initiated on the 16th, which is, of course, in this week from the 20th. So that definitely could be one catalyst for the main reason why semiconductor stocks are down pre-market as well. And another news item that we also want to talk about is that Google is down between 2 to 3% pre-market because the Samsung has there's rumors that Samsung is considering switching their primary search engine from Google to Bing, and that is definitely problematic as Microsoft is starting to take a major dent in Google's overall business and so forth. So Microsoft has been one of the key market leaders in the space because of their AI and search engine, and they're definitely taking a bite of Google's overall market share. So this is a big problem for Google and long-term investors in Google. But definitely, if you guys were to day trade, Google is one short and Microsoft is one call that you can do. Now, the game plan and strategy for us today at StockX Capital is that we give the slight edge towards the downside in the short term between Monday and Tuesday. Specifically on techs, we want to see if NASDAQ can break below 13,000 because that is one strong gamma support for that following stock. So let's see if that occurs. We also want to see if S&P 500 remains above 4130. If that is the case, then most likely the market is going to remain in the bullish territory and hold those higher numbers and those higher lows. So we want to see those key inflection points below 4130. It's very possible to see 4100. So keep that in mind, and that will be our lower range. But overall, we do expect the market to have a chop range, 95-point range. So we believe that every pop should have a modest drop as well. And as long as you time your trades, you can definitely be successful this week. So we were successful last week and the week before and the following week, and we've been highlighting all our trades as well. So if you guys want to be part of our community, hit us up. Our Discord is free, and we also have a paid mentorship program as well for those that are looking to accelerate their learning process and excel their journey in trading. So thanks, guys, for tuning in. We look forward to providing more morning content, and we'll see you guys soon. And let's get that money, guys.